Welcome to today's edition of the Statler Financial Radio Show. Your financial security is our business. Have a question for the team? Call today, 863-877-1188. That's 863-877-1188.
According to the saying, nothing is certain except death and taxes. And that tax impact is something that you just can't escape even in retirement. But there are a few steps that you can take to help reduce the impact of taxes on your retirement savings. Thanks for joining us today, everyone, on the Statler Financial Radio Show. I'm your host, Danielle J. Martin, alongside Phillip Statler. He is the president and founder of Statler Financial Services. Phillip, I'm looking forward to today's show because we're talking about something that many of us try to avoid, and that's taxes, right? So the only thing that stays the same is change. But over the years, we've seen a lot of changes when it comes to taxes. Tell us, what's the number one thing that we should keep on our minds when it comes to taxes?
Well, you're right. I think the number one thing right now is that we are in the lowest tax brackets that I believe we're ever going to see. I just don't see, with the debt that we continue to accumulate and interest rates going up, I just don't see how we can keep our tax rates as low as we are. I mean, think back, Danielle. We've not always had income tax. We've not always had taxes. You know, back, if you think about it, the first ever estate tax was back in 1797, and they did that to fund the Navy. Before that, all we had was some excise taxes on goods and services, like things like alcohol and tobacco, you know, the sin tax, so to speak, back then. We really didn't get our first income tax until the Civil War came around. And we needed to fund the Treasury in order to be able to fight the war. And so that's when we really saw that first income tax really get passed. Then you think, well, there's a lot of taxes we pay today, and we didn't used to have those, right? The first sales tax, get this, was enacted in 1921. Before that, we didn't have sales tax even. States like Alaska, Delaware, Montana, New Hampshire, and Oregon were the only states that didn't charge a sales tax. And I think a lot of them still today don't have a sales tax. So there's just a lot of things that really kind of got put in perspective when we look at taxes. I mean, then there was gasoline tax. It came around in 1932. Now, I can't tell you how much we end up paying, you and I. What we pay in gas taxes anymore for our vehicles is a big number. It just continues to mount and mount as we continue to move forward, Danielle.
And speaking of income tax, Phillip, you know, I know many people have questions about this. So what are some things that we should know about how different sources of income are taxed, especially in retirement?
Well, that's a good question. One of the things that happened in the early 80s was Ronald Reagan. You know, as much as we all loved him, he is the one that started the taxation of our Social Security. Prior to that, Social Security was a non-taxable income. However, I think it was 1982, 83, somewhere around there, it became taxable income. And the rate, you can have to, back then, it was up to 50%. Well, that wasn't enough. Down the road, that got changed. So now up to 85% of your Social Security can end up being taxed as income. And a lot of people forget that. They don't realize that that is going to be an issue. And that's one of the reasons that when we put together our income planning process, we take note of that. Folks, listen, if you are close to retirement, what does that mean? If you are 5 years out, now's the time to start planning for your retirement. And if you've already retired, it's not too late to get everything in order. Give us a call at 863-877-1188. That's 863-877-1188 to schedule your core retirement design.
You know, there's no cost or obligation to talk with Phillip and the team at Statler Financial Services. Like he mentioned, it's complimentary. It's a free call. So just don't hesitate to give that number a call, 863-877-1188. That's 863-877-1188. Phillip, most people will have Social Security, as one of their sources of income in retirement. So are there any tax impacts when it comes to getting those Social Security checks?
Absolutely. Like I said earlier, back in the early 80s, Social Security became taxable. And so now up to 85% of your benefits may be taxable income depending on your current situation because it's all based on your income. So listen, if you're filing a federal tax return as an individual and your combined income is between $25,000 and $34,000, so you're filing single and your income is between $25,000 and $34,000, not really including your Social Security, then up to 50% of your benefits may be taxable. Now, if you're single and your combined income is more than that $34,000, then up to 85% of your Social Security may be taxable. So let's look at the joint numbers now. So if you're filing a joint tax return with your spouse and your combined income is between $32,000 and $44,000, now you may pay tax on up to 50% of your Social Security benefits. And then once you get over that $44,000, it can be up to 85%. Now, there's this funky calculation you have to make to determine how much your Social Security is taxable. It's not one of those things you can just get out by memory and go through and do real quick. So you'll want to make sure that you take the time, talk with your CPA or your tax advisor, and make sure that you understand how much of your Social Security may end up being taxable in this year.
And Phillip, when it comes to taxes, I know many of us have questions because they keep changing, going up and down, and trying to figure out where I'm being taxed. So how do you talk to people who are concerned, especially about taxes impacting their retirement in the near future?
Well, Danielle, it's part of our core retirement design to really talk about what that looks like, what taxes look like down the road, especially when we think back to 2017 and the passage of the Tax Cuts and Jobs Act, which really did a couple things. It lowered the corporate tax rate to 21%, and then it dropped your and my rates, our top rate, from 39.6 to 37%. So it really did, and dropped your and mine probably down to 12 to 22%. So it was a big deal when we look about that. But in all honesty, we look at that and we talk about what are we paying in taxes and how can we pay the least amount possible. And so when we dive in and look at our core retirement design, remember there's three things we look at there. We look at risk. How much risk do we have in our portfolio? And do we have the right amount of risk? Because here's what I've seen historically is about 60% of the folks out there actually have more risk than they should going into retirement. There's that, about 20% of the folks out there that have it right on the money. They've got the right amount of risk for their current situation. And there's about 20% of the folks out there that don't have enough risk in their portfolio. I got to tell you, Danielle, that not having enough risk can be just as detrimental to your portfolio as having too much risk. And so we want to make sure that we balance that out. The second thing we look at is taxes. We want to make sure that folks are paying the least amount of taxes, not just today, but over their retirement lifetime and the lifetime of their beneficiaries. So we want to expand that out and pay the least amount we can. And that's one of the things that we look at in our core retirement design. And the last part of that is making sure that we have an income plan in place. We want to make sure that we've got the numbers we need to do what we need in order to pay the least amount of taxes and get the most income we can. Give us a call at 863-877-1188. That's 863-877-1188 to schedule your core retirement design.
We like to remind you that there's no cost or obligation to talk with Phillip and his team. Again, that number is 863-877-1188. Do not hesitate to give the team at Statler Financial Services a call, 863-877-1188. Phillip, you keep mentioning that keyword income. It's the foundational principle, obviously, that we need throughout retirement. And, today's federal income tax rates, they might be the lowest that we've seen the rest of our life. But as you mentioned, after tax rates going down with the the 2017 Tax Cuts and Jobs Act, we know that tax rates expire at the end of 2026. So it's not a matter of if, but when they go up. Is that right?
Well, it is. And it's actually a little correction there. It's actually not the end of 2026. It's the beginning of 2026. So 2025 is the last year that we're going to see the tax rates that we have right now. So we know that in 2026, they're automatically going to go up no matter what, unless they can go back in and change the law, which they can do. Mm-hmm. But given what we have in Congress right now, I just don't see that happening. And so, listen, for everybody here that's listening, a few areas that can be a little more tax efficient when it comes to their retirement money is one, I want to be able to help you understand the potential impact tax is going to have on your retirement savings, because it can eat up your savings pretty quick. Learn about ways to reduce or hopefully even eliminate maybe your taxes in retirement. And last, we want to create, again, that income strategy to make sure that your income can last as long as you need it to last. Give us a call at 863-877-1188. That's 863-877-1188 to schedule your core retirement analysis.
There's a short window of opportunity right here to take action to keep taxes from taking too much of a bite of your hard-earned savings. So do not hesitate to give Phillip and his team a call, 863-877-1188. Stay with us. We'll be right back.
Turn your plans of yesterday into yes today. Don't wait another day for a routine checkup of your retirement plans. Call Statler Financial Services, 863-285-3815. That's 863-285-3815.
Surprise parties can be fun.
Surprise!
Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Phillip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Phillip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Phillip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor. Time to retire right. This is the Statler Financial Radio Show.
Welcome back to the Statler Financial Radio Show. I'm your host, Danielle J. Martin, along with Phillip Statler. He's the president and founder of Statler Financial Services. Now we're talking about what it looks like creating a 5-star retirement plan. Well, picture a 5-star luxury resort. You have lush greenery, you have scenic views, and top-notch customer service. Now picture a run-of-the-mill roadside motel. Are you going into that? It's a roadside motel, probably is not going to be able to achieve that 5-star rating because I'm sure you know something is missing. Well, look at it like this. If you could rate your retirement plan, how many stars would you give it? So, Phillip, let's take this a step further. We're trying to see how ready we are for retirement. And I love this analogy of how can we make sure that our plans have a 5-star rating? What does that look like?
Well, I think that when we look at that, we have to look at 5 main points that I believe that you need to have to achieve that 5-star rating, right? We need to have a reliable income plan that is consistent and conservative. We need to have a wealth management strategy. We need to have a tax efficiency strategy. We want to be tax efficient in retirement. We need to have a plan to address healthcare. And then lastly, an estate planning strategy. What does that look like for you? And I know, I call them stars, but in reality, they're just 5 key components of having a great comprehensive retirement plan, Danielle.
And I love that you listed all of them out for us, Phillip. And what I would love for us to do is you make this sound easy every time. So what is the first step when we're talking about building this overall 5-star, but like you mentioned, it's components to an overall comprehensive retirement plan? What is the first step for building a reliable income plan?
Well, I guess you would start with how much income are you going to need, right? In retirement, what does that look like? And I think that there's some misconceptions here because a lot of folks have come to believe that, well, I only need half my income, or I only need, 70% of my income because I'm not going to pay as much in taxes and blah, 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 right? I mean, that's the thinking a lot of people have. And what we are actually finding is that, we really need to come somewhere greater than that number, somewhere probably between 70 and 100% of your current income. And that's really if you're debt free. If you're not debt free, then we definitely need to probably 100%, right? So that's kind of the first thing is how much do we need? And that comes down to what are we going to spend? So we have to kind of put together that budgetary item and determine what our spending is going to look like in retirement. And then from there, we can build the income. Where's it going to come from? How are we going to get it? Where's it going to rest? I use a bucket system where we bucket out money. We got this bucket for a certain period of time, and we've got 4 or 5, maybe 6 buckets of money that we're using to create that income over your lifetime. And so it's just having that process in place to be able to work through it.
Phillip, you brought up a good point of making sure we have enough money to last us as long as we live. So what are some of the tools for generating some income in retirement?
Well, I think when we look at tools, there are obviously bank accounts. I mean, we've got Social Security, whether you call that a tool or not. I think it is to the standpoint of when do you take it? You can minimize it or maximize it, right? And that becomes part of the process and the tool part of Social Security. There are things like annuities that were created specifically to help generate income. Now, when we talk about annuities, there's, obviously you draw a little T account, Ben Franklin, and there's positive and negatives, right? So you have to weigh those out to make sure it's going to work the way you want it to, and it's going to add value to your income planning process. A lot of people, they have their portfolios, they have dividend stocks. Some people are just using CDs right now because interest rates are so high. So there's all kinds of tools out there. Some people have rental property, right, that are paid for, and that's generating a lot of income for them. So there's a lot of tools out there. You just got to know how to put those tools to work in your current circumstances. And again, that comes back to the process of why I developed the Core Retirement Design. The Core Retirement Design looks at 3 key components. It looks at risk in your portfolio, and it measures that. It looks at taxes, not just today, but taxes down the road and what that's going to look like to you in your retirement. And lastly, an income plan. Having that income plan in place so that you are confident in the retirement income that you're going to get month in and month out. The Core Retirement Design. Folks, give us a call at 863-877-1188. That's 863-877-1188 to schedule your core retirement analysis. Again, that number is 863-877-1188.
Phillip and his team have been doing this for many years, so they have experience in the questions that you have. They have answers to them, so there's no cost or obligation. All you have to do is give him and his team a call at 863-877-1188. Again, that number is 863-877-1188. Phillip, can you talk about what is the difference between an income plan and a wealth management strategy?
Well, an income plan, Danielle, is setting up streams of income. A wealth management strategy is where do we put those, right? How do we get them? What is a strategy? And I look at more as a risk strategy because when we head into retirement, we cannot afford another bear market like we saw in 2000 and 2008 to wipe out everything that we've worked hard for. And so, we saw a lot of people that their 401ks were cut in half during those bear markets. And if you are getting close to retirement, that's something you cannot afford. And so we look at first diversification. we look at two types of diversification. The first type is safety versus risk. And folks, you need both buckets. You need both key components. The question is, how much do you put in each one of them? And that's part of the wealth management strategy, is determining how much goes to safety, how much goes to risk. And then in the risk bucket, you've got to diversify even further. But that's really the wealth management strategy, is where do we put the assets to create the income that we're going to need in retirement?
Phillip, you mentioned that word assets, and so it kind of leads me to this question of, should retirees still have a portion of their retirement assets invested in the market?
I believe they do. Now, how much is up for debate, right? So I believe that we start with what I call the rule of 100. And the rule of 100 says, I'm going to take your age from 100. So 100 minus your age gives us a net number. If you are 65 years old, try that as 35%. So 35% is what we would be a starting point, not an ending point, but a starting point of what you might want to have invested in the market. Now, we narrow that down more by doing a risk analysis on you to determine what your risk tolerance number is on a scale of 1 to 100. And we use that to massage that number up or down, depending on what that looks like for you. But that's the key point. And I tell people, look, if you're 90 years old, you still need something, maybe 10% in the market, because that's going to help us continue to grow our money no matter what.
And I know many people have questions about this, Phillip, and so it kind of makes me think and wonder, why is it important for our money to keep growing in retirement? Because we don't want it to stop, right? We want our money to last as long as we live. But why is it important for our money to keep growing?
Well, I think, Danielle, if folks think back over the last 3 years, they know why, right? Because inflation, that ugly word, has really become part of our vocabulary, unfortunately, because everything costs so much more now than it did 3 years ago. And so a way to keep up with inflation is to grow our portfolios, to grow our investments to help us through that process of keeping up with inflation. And that's one reason that we look at the stock market, because the stock market historically has helped folks keep up with inflation. And so I know it goes up and down and there's volatility involved, but that's where we have that diversification between risk and safety. And so if we get those allocations done right, then we can handle some of the ups and downs and the volatility that we see in the marketplace. But all of this comes to planning. I mean, that's the bottom line, Danielle, is we have to have a plan. And that plan needs to be written so that you know what it is and you can go back to it and look at it and say, okay, yes, I'm on track. I'm okay. And that's why I developed the core retirement design, to help people design that retirement they always dreamed of. That's important. You've worked hard to get to where you are, and now you need to be able to enjoy that time in retirement. Give us a call at 863-877-1188 to go through our core retirement analysis. Again, that's 863-877-1188. It starts with a simple phone call. You and I discussing where we are, what you need to do, and how you can prepare for that retirement. Again, give us a call at 863-877-1188.
Now, you don't want to make any financial decisions without fully understanding the full impact on all the other pieces of your retirement plan. So do not hesitate to call Phillip and his team at 863-877-1188 to learn more about the benefits of having a comprehensive retirement strategy. Again, that number is 863-877-1188. Now, again, we were talking about what it looks like planning for that 5-star vacation, because when you plan a vacation, you know how to research flights and hotels and look for all the savings. But how can you do the same thing for your retirement plan? We're going to continue the conversation on what it looks like to create a 5-star retirement plan right after this.
Needing a second opinion on your retirement plan or to see if you're paying more than your fair share to Uncle Sam? Schedule your complimentary visit today. Text VISIT to 863-877-1188. That's VISIT to 863-877-1188.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Phillip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Phillip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Phillip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor.
I want to help you understand some things. Number one, timing of your RMD, because they could potentially push you into a higher tax bracket. Imagine how fast your savings could shrink if you rack up penalties along with taking regular withdrawals and paying taxes.
Time to retire right. This is the Statler Financial Radio Show.
Welcome back into the show. You're listening to the Statler Financial Radio Show. I'm your host, Danielle J. Martin, along with Phillip Statler. He is the president and founder of Statler Financial Services. We're continuing the conversation of what it looks like creating that 5-star retirement plan. Because, when you plan for a vacation, you know how to research the flights and hotels and look at your savings to make sure you have enough, because you want to make sure you get the most bang out of your buck. But the question is, it's also same thing for your retirement plan. Are you doing the exact same thing? It's important to make sure that you are taking the steps to help preserve your retirement savings. So, Phillip, one of the areas where we can really help protect our savings, you mentioned this earlier in the list, is being tax efficient. So can you kind of explain to us the difference between tax planning and tax preparation?
Absolutely, Danielle. So it's really a simple distinction, right? Tax preparation is historic, right? Typically we get to, January, February of the year after, and now we have to do our tax return. So we're looking back to the previous year and we're taking that information and putting it on the tax forms and paying Uncle Sam what we owe him, and we're done. That's tax preparation. It's historic. There's nothing we can do to fix it after it has happened. Tax planning is looking ahead, making adjustments based on belief of what the tax system is going to look like down the road, and not just today. I mean, if we're just focusing on planning for today, it'd be one thing. But we are looking at saving tax dollars, not just today, but over your retirement lifetime. If we can save, $50,000, $60,000, $70,000 of taxes today by doing something different, doesn't it make sense to do that? And that's part of our core retirement design. In the tax element, we are looking for ways that we can save taxes down the road, not just for our clients, but also for their children, right? Because that becomes important, is how much can we save in dollars over your lifetime and your children's lifetime? And that's the planning process. And that's what we really have to look at when it comes to tax planning.
Phillip, I love this conversation because you make it sound so simple for us. So how do you approach tax planning? I would say with the goal that your clients can spend more of their retirement dollars the way that they want to.
So what we look at is, we look at what does it look like now, right? We know that tax rates are today probably the lowest that you and I will ever see. And we know that in 2026, they automatically go up unless some miracle happens, right? Which it could, but is very slim. And so we know that we're going to see some income taxes going up in 2026. And if you follow the national debt and what that looks like and interest rates going up, you can just visualize that the only way to pay that debt is going to be increased taxes down the road. And so, unfortunately, that's the belief of most of us out here, is that taxes are going to have to go up just to continue to pay the bills. And so it may make sense to pay some tax now versus paying higher taxes later. So we look at things like Roth conversions. That's a big deal. Or even just taking some money now and putting it into a non-qualified account, because taxes are lower now than what they're going to be in 2 to 3 years. But it's a process, because there's this little fine line you have to walk between, taking too much and doing the Roth conversion and not taking enough. So I believe we should max out our tax bracket. So if you're in a 12% tax bracket, you need to be looking at ways that you can do Roth conversions to maximize that 12% tax bracket. If you're in the 22% tax bracket, we need to maximize the 22% tax bracket, because those tax brackets down the road are going to be a lot lower than what we're going to see. And so that's the process. And it's a big part of our core retirement design, is analyzing where you are, what tax savings are going to look like for you, and what can we do? How can we plan that out efficiently and effectively to make sure that we're paying the least amount of taxes over our retirement lifetime? The number to call to get on the schedule is 863-877-1188. That's 863-877-1188 to walk through our core retirement analysis. It's you and me, 30 minutes, figuring out where we are and where we need to get to. It's that simple, Danielle. It's only a phone call, right? 863-877-1188.
That's right, Phillip. We like to remind our listeners that there's no cost or obligation to have a 30-minute phone call with you and your team. Again, that number is 863-877-1188. Don't hesitate to call 863-877-1188. Phillip, as we're continuing down the list of creating that 5-star retirement plan, you mentioned healthcare. And so that kind of leads me to this stat that I want to share with you that says, according to Fidelity, a 65-year-old couple retiring in 2022 can expect to pay an estimated of $315,000. That's after tax for healthcare in retirement. Now, that is not including long-term care. So, Phillip, are retirees even aware that this steep estimate, and how can you help them prepare for that number?
Well, let me break this down in kind of my opinion and the way I look at it. And that's the 2022 number. Believe me, it won't be long before Fidelity comes out with their 2023 number and what that looks like. And it'll be more than $315,000, because I can remember a few years back, that number is $250,000. So obviously inflation is big when it comes to healthcare costs as well as everything else. And so you have to remember that big number is for a couple. So that's 2 people. And that's for your retirement lifetime. If you retire at 65, they're expecting you to live 25 to 30 years in retirement. And so if you break that down annually, it's a big number. Don't get me wrong, but it's not as hard to get your hands around as that huge number they throw out there. It is important to understand that this is why we need an income plan that allows for and gives us some inflation step-ups to help combat things like this, that inflation not only does for healthcare, but other items that we have to pay for. And so I think that it's just a process that we need to understand that healthcare is going to cost more and more, and that we've got to plan that and build that into our income planning process.
Phillip, what are some of the options for addressing, I would say, potential long-term care costs? Because that number I gave you earlier, it didn't include long-term care. And so what are the options for addressing the long-term care costs?
So I look at long-term care in a couple different perspectives, right? I look at first, because we didn't really have these 20 or 30 years ago. I mean, they were there, but they weren't mainstream, and that's assisted living. And so assisted living is one step in long-term care. But what I have seen, and this is true, I'm going to say in our local market, not necessarily in the Northeast or on the coast of Florida, because their prices are a lot higher than ours are. But a lot of folks in our immediate area actually can pay long-term care as far as assisted living out of their existing cash flow. Yes, is it expensive? It is expensive. But typically, if you have to go into assisted living, you're cutting out other expenses as well. And then there's nursing home. Well, that's a whole different animal, right? And so how do you pay for that? Well, you could buy long-term care insurance, way back when, and that will help offset some of the cost. There are actually life insurance contracts, life insurance that have living benefits that will help cover assisted living and nursing home. And so that's an option. There are annuities out there that have long-term care benefits where they take your benefit, their account balance, and maybe double it or triple it. There are different things out there. But let me just say, they all have pros and cons. And you need to look at them specifically and weigh those things out to make sure that they are going to make sense for you. And then lastly, if you don't do anything, then you're going to be subject to Medicaid is stepping in to help you out. Now, there's ways to plan for that as well. And I'm not the expert, but I have a team of folks that can help us walk through that process as well. So there are different avenues to take care of long-term care expenses. We just need to have the right team in place to help walk through that process, Danielle.
Now, Phillip, one of the last items that you had on creating the 5-star retirement plan is estate planning. So very quickly, how does estate planning fit into an overall 5-star retirement plan?
Well, it comes back to beneficiaries, having the beneficiary designations properly listed on your accounts. And, if your estate's big enough, maybe you should have a trust. If it's not big enough, then we need to make sure that we've got beneficiaries on all of our accounts, our bank accounts, our non-qualified accounts. You can add beneficiaries to those accounts, and you need to make sure you've done that to help bypass probate. So that's the thing. The other thing I will say when it comes to estate planning documents is, a lot of people think of a will or a trust as estate planning documents, and they are. But there's a couple other ones that I think are as important, maybe even more important. And that's power of attorneys. Having that financial and healthcare power of attorney set up is huge. And I say it this way, Danielle, because the power of attorney is going to take care of you while you are alive. The will, the trust, you're gone. You've passed away. Now, that may be a harsh way of looking at it, but the power of attorney is going to take care of you while you're here alive. And that's why I think it's ultimately important that you get those things taken care of.
Now, to recap everything that you mentioned, Phillip, the 5 ways to create the 5-star retirement plan include a reliable income plan, a wealth management strategy, a tax-efficient strategy, and a plan to address healthcare, and also an estate planning strategy. I know you and your team have done this for many years. And so how do you help people build a retirement plan that incorporates each part? And what's the best way that we can contact you and your team?
Absolutely, Danielle. So again, that's why I created the core retirement design to help people design all parts of their retirement process. And it starts with risk analysis. How much risk do you have in your portfolio versus how much risk should you have in your portfolio based on your current circumstances? How close you are to retirement? How old are you? These are all important pieces of that puzzle. And then we look at taxes. What do taxes look like for you today? What are they going to look like for you in 5 years or 10 years? We don't know exactly, but we can make some assumptions and plan out what that may look like for you. And then we need to make sure that we've got that income plan in place. And we need to build it to make sure that we're taking care of inflation. To start that process, give us a call at 863-877-1188. That's 863-877-1188.
Well, we've covered a lot here on the show today, but we're still going to put Phillip to the test. Coming up in our retirement trivia, you're listening to the Statler Financial Radio Show. Don't go anywhere. We'll be right back.
Do you have a retirement plan but would like a second opinion? Call Phillip Statler today, 863-285-3815. Statler Financial Services, 863-285-3815.
Surprise parties can be fun.
Surprise!
Financial surprises? Not so much. Especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Phillip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Phillip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Phillip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor.
Welcome back into the Statler Financial Radio Show. I'm your host, Danielle J. Martin, alongside Phillip Statler. He is the founder and president of Statler Financial Services. Hey, so we're going to switch things up here a bit. Coming back into the show, now we're going to take a little time to put Phillip to the test with the round of retirement trivia. And our topic today, Phillip, is, you're going to love it, taxes. Okay.
Gotta love taxes, man. That's keeps the world spinning, right?
Exactly. And I think you're going to do well because you always bring really, really good insights and different perspectives here. So starting with question number 1, it reads, about how many words in the U.S. tax code are there? 1 million, A, or B, 1,000, C, 4 million, or D, 6,000?
Wow. The words, that's a little tricky because I know that there's over 70,000 pages. I mean, I know it's a long, long document. Now, how do you equate that to words? You know, if you think 70,000 pages, I originally thought, wait, 1 million, but then I thought, well, how many words are on a page? And that may not be enough. 1,000 and 6,000, well, those are way too little based on 70,000 pages. So I think this time I'm going to pick 4 million, C.
That is correct. And explain why. Why would you explain for 4 million to be the reason?
Well, again, when I look at my choices and 70,000, right? 70,000 pages, I can't even imagine how many stacks, how high that would be if you did that. And so it really, that's just a lot of pages. And I feel sorry for those people that have to parch through it all the time to try to figure things out. But, I picked 4 million because that's, when I look at 70,000 pages, that's a lot of words.
That adds up to be right. So Phillip got it. C, 4 million. That is how many words are in the U.S. tax code. Okay, so as we're moving on to question number 2, let's see if you can get this one. What year did the IRS begin requiring taxpayers to list their dependents' social security numbers? Okay, we have a couple of dates here. A, 1987, B, 1960, C, 2001, or D, 1945?
Man, can you give those to me one more time, Jenna? Let me write them down because that's going to be a little bit difficult to try to figure that out.
We're going to figure out what year the IRS began requiring taxpayers to list their dependent social security numbers. Now, the times are different now, so think about it like this. So we have A, 1987,
okay,
B, 1960, C, 2001, or D, 1945?
Man, so I'm going to have to do some reasonable, reasoning and deductible reasoning, I guess you call it. Isn't that what you call it? So I know it wasn't 2001 because I've done taxes long enough to know that it's always been that way. Mm-hmm. Well, not always, obviously, but it's been that way for a long time. Now, obviously, 1960, 1945, I wasn't around. So that boils it down really to only have one choice left, and that's 1987. And I only did that by, process of elimination.
Okay. Yes. So 1987 is right. It's when the IRS started requiring Social Security numbers of dependents. A whopping 7 million children vanished from tax returns. Really good. Okay. I would say definitely process of elimination helped you, but we're going to give that to you. Okay. Moving on to question number 3. We have a true or false. So this is pretty 50-50. You can get it either way. So more than 20% of returns filed on paper have at least one error. True or false?
I'm going to say that's true because I bet that it's more than that, really.
You got it right. Yes, 20% of hard copy tax returns contain errors, while less than 1% of electronic returns do. They say that these errors can raise the odds of an audit or delay refunds. Now, I'm sure you familiarize yourself with this as well, possibly getting some errors yourself or just kind of helping people with their taxes as well.
Well, you think about it, electronic, right? It runs through this error checking, right? So it checks the return. And so it won't allow you to file that return electronically if there's a known error. Now, there can still be obviously errors in the numbers, but otherwise you can't really make an error as far as forms or, from that standpoint, it's much more difficult to do. So I get that. I would bet that people that file on paper, though it's getting to be less and less, it's probably more than 20% actually have errors on my bet.
That's absolutely right. Let's see what we have for question 4. So we have another true or false. Dang, we're making it easy for you today. It's your lucky day.
I just flipped coins. I just start flipping coins.
Okay, so we have the IRS has more people working for it than the Federal Bureau of Investigation. True or false? Do we have more people working for it or not?
I'm going to say that one's probably going to be true as well, only because I think that I think there's more IRS, big IRS offices around the country than there are FBI offices around 100%. The country. Big ones. I'm talking about like big buildings. And so that's my reasoning is I think that makes sense that there's more that do that. And I know Congress keeps adding to it. So it's an increasing workforce.
I agree, Phillip. I mean, even just like hearing it, I would say definitely because listing here, they have that over 90,000 employees are the IRS has working there and expect to grow its workforce to 105 employees by next year, 2025. While right now they say only 37,000 employees work for the FBI. So yeah, I mean, just looking at all of the taxes that we have to deal with, I would definitely expect them to have more employees than the FBI. So they're expected to hit 105,000 employees. I mean,
that's a lot. And let me give you just a little insight because a buddy of mine just did some continuing education with dealing with IRS and audit and that kind of stuff. And you know that those 15,000 new employees they expect to hire this next year, plus some of the ones, I think the 25,000 they hired was it last year or the year before, all of those are not going to customer service, which is they need drastically. They're going to audit. So all those new employees are going to be auditing you. They're trying to drive up the audit rate on individual tax returns. So
wow,
be prepared for more notices and more audits.
This is why we need help. Okay. Okay, let's get to our next question. Question 5 says, this is okay. We have multiple choice here. Let's see. So what famous arena is exempt from property taxes? We have A, Matthews Arena in Boston. We have B, Madison Square Garden in New York. We have C, Sphere in Nevada. And we have D, Wrigley Field, Chicago.
So Sphere, tell me again, where's the Sphere at?
That is in Nevada.
Okay, Nevada. Okay,
Nevada.
Because that could make a big difference. What state it's in? Because I have no idea. So it's just going to be like throw a dart against the wall.
Right.
I think it was probably the Sphere. I think it was probably Nevada. They gamble a lot there. And so, they don't necessarily, that's how they get their revenue. So they probably don't need the property taxes from that. So I'm going to say it's the Sphere in Nevada.
I'm sorry. It is B, Madison Square Garden in New York.
New York? They allow somebody not to pay property taxes in New York?
Yep. So the arena has been exempt from New York property taxes since, get this, Phillip, 1982.
No way.
Since 1982, the arena has been exempt. So the agreement was only supposed to be for 10 years, but it was worded incorrectly. So the exemption will be in effect as long as the Knicks and the Rangers keep playing their home games there. So that's quite interesting, actually.
So the New York attorneys didn't catch that, huh?
Right. Exactly. Exactly. So unfortunately, shout out to them. That's exciting, I guess.
Yeah. I mean, can you imagine what the property taxes would be in Madison Square Gardens in downtown New York? My gosh.
That's crazy expensive. Okay. So we have time for one more. Here's a bonus question. I don't know if you're going to be familiar with this, but we'll see. Which famous criminal went to jail for tax evasion? This is A, John Dillinger. We have B, Ronald Cray, C, Pablo Escobar, or D, Al Capone.
I know this one. I know this. This is one you always talk about, right? When you talk about money laundering and criminals and, the whole mobster deal. And that would be Al Capone. That's what he's known for is, all the crap he did. He got put in jail because he evaded taxes. Just think, if he had paid his taxes, he might still be alive and doing his thing.
You're right. Okay. You got that one. You did. He was evicted of tax evasion in 1931 and had a prison sentence of 11 years. So you got it. Really good job. You only got one wrong. So,
hey, I tried.
I guess you know a little.
Some of them I had to guess, but
Yeah, you did do a process of elimination, which has worked in your favor. But Phillip, as we are coming to a close here on the show, kind of remind our listeners if they have questions about their own retirement plan, if they want to sit down with you as we're closing out the year, talk about your core retirement design and how it benefits them.
Absolutely, Danielle. Several years ago, I worked hard to put together a process we call our core retirement design, where we help people design that retirement they always dreamed of. We really look at three key aspects of retirement. It starts with risk, because risk in retirement can be deadly. A lot of people head into retirement and they don't make any adjustments to their portfolio, or they work with somebody who's really good at accumulation, but not so much when it comes to the distribution phase. And so that's what we focus on. Second is taxes. Folks, I want to make sure that you are paying the least amount of taxes, not year over year, but over your lifetime of retirement, making sure that you pay the least amount as possible, trying to get to the point where we have you at a 0% tax bracket. Does it always work? No, but we work hard to get you to the lowest tax bracket we can. And then lastly is making sure that you have an income plan in place. 70% of the folks out there heading into retirement do not have an income plan in place. Folks, you need to have one. It needs to be written. You need to know where your money is going to come from and when it's coming. Give us a call at 863-877-1188. That's 863-877-1188. Schedule your core retirement analysis, where we'll make sure that you're on the track to the retirement you always dreamed of.
Hey, we want to remind you of that number again. It's 863-877-1188. That's 863-877-1188. There's no cost, there's no obligation to sit down with Phillip and the team. 863-877-1188. That's all we have for you for today's Statler Financial Radio Show. We hope you guys have a great week. We'll talk to you guys next time.
Advisory services offered through Second Half Financial Partners, LLC, a SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. This radio show is a paid placement.